Good morning. Today is Monday, October the 16th. The time right now is 10:31 in the morning. Now, on the over the weekend, we can see that the tension in the Middle East, in particular between Israel and the Gaza Strip itself, we can see that the tension is getting worse because essentially Israel just issued a evacuation for the Palestinian to move to the south, and this is perhaps preparing the ground for a ground assault, and this is having neighboring countries very concerned. And we should be concerned as well, because this has the potential to actually enlarge the tension throughout the whole Middle East. And we have seen commodity prices has actually reacted violently to the upside. We have seen crude oil prices surging as well as precious metals surging. Now, we are going to talk about the various markets to give you an overview of what happened on Friday. We can see equity market actually is back from a high of 33,957. In the cash index, we can see Dow Jones actually managed to go up. However, on a close basis, it has not been able to take out the 33,900 levels, although it did penetrate momentarily. So the price actually came off a little bit. On top of that, we have a collapse in the Michigan Consumer Confidence Index, which is actually not going to be conducive for equity prices going further. Okay, so the whole idea is that we have a climate of higher inflation. We have seen last week we have the PPI numbers, we have the CPI numbers, and both suggest that inflation is coming back, and of course the sentiment among US consumer has taken a beating if we take the Michigan Consumer Confidence Index as a guide. And on top of that, this uncertainty surrounding the Middle East tension is also hanging over the market. So let's see what happened over the next few days and week. Okay, in the S&P 500, we do see the same phenomena. The market did not quite cover this gap that was at 404.01 2 Mondays ago. We can see that the prices actually came off from here with a high of 4,385.85 on Thursday. So Friday, basically, what market was actually going down, and this could lay the stage for further losses to challenge the 4,216.45 that we saw the week before. And over in the Nasdaq 100, we are also seeing pullback in prices. Of course, the three-way pullback in the Nasdaq 100 did not quite hit its original target at 14,244. We have a low, which is 2 weeks ago at 14,432. So we actually missed that level by something like 10 points. But this is actually very minor in comparison. But by and large, I do see the possibility of an extended pattern moving, favoring the downside. So we could have a situation in which the market will go down and challenge the fortnight low at 14,432 in the cash market. And over in the Asia itself, we can see the Hang Seng Index has actually been doing very little. This morning, there was an attempt to actually rally, but again, which is very tentative. Market high so far is just under the 19,000 levels. 18,392 was a high last week, and we can see prices has been pulling back this morning. We have a bit of stabilization going on here, but by and large, we do see going forward, the momentum seems to suggest that we probably will test the lower end of the market. Now, 2 weeks ago, we have a low at 17,133. So there is a good possibility that with this level may be revisited very, very shortly. And in the Nikkei 225, we also see prices pulling back in the Japanese equity market. Last week, we have a high of 32,660 in the futures market. And right now, the market is trading at 31,770. So we can see market has pulled back almost 1,000 points from last week's high. So this is setting the stage for a revisit of the 31,000 levels, which is this level over here. Now, somewhere around 31,000 is going to be somewhere I think the market is going to gun for, at least in the short term. Okay, and over in currencies, we can see that the dollar has managed to recover, but again, this morning we have a bit of a softness going on in Asia. Now, this is you can see this surge here from around the 105 half levels all the way to 106.56 level. This is a big move here, basically reflecting the tension in the Middle East. As we all know, dollar is seen to be a safe haven asset. So in time of uncertainty, there is that we call it the instinct to actually hold on to safe haven assets, and the dollar is definitely categorized as one. So this dollar strength may actually last for a while, perhaps even taking out a 107.05 high that we saw in the early part of September. So we can see that this is going to be something that we can actually anticipate. Okay, over in the principal currency, the fact that the dollar is coming back in a big way, that means that there's a possibility the high traded in the euro versus the dollar at 106.40 is probably the peak for this round. And the danger here is that going forward, we may see further losses in the euro dollar, okay, perhaps to even challenge the 104 levels. So do watch out for a revisit of this level here between 104 to 104.5. Sterling is also having the same trajectory. We can see that the prices has pulled back from 123.37 high, and we have a low on Friday at 121.22, and currently the market is just marginally above this, and it looks like it's going to re-challenge this level here that we saw last week at 121.12. Okay, so do watch out for a re-challenge of this level. Over in the Aussie, same thing here. The Aussie has actually challenged this low that we've seen at 0.6285 with a low of 0.6286. Just one pip separates the two of them. So we're having a bit of a bounce going on right now. But by and large, this market does suggest that further losses is possibly in the card. And overall, if the market do rally, top side resistance is likely to be around 0.64 to 0.6430 levels. Now, dollar yen is a peculiar one. The market has been very, very cautious in taking the market higher beyond 145. So, 150. So the 150 high was the highest this year, and from there the market has a mysterious 300 points drop, almost 300 points drop to 147.27, and we have a bounce back to 149.83 on Friday, and now the market is probably coming back down again. If there is no fear of intervention by the Japanese authority, there's a very good chance dollar yen will be way above 150. However, that being said, intervention fear is definitely something we want to consider, because this time last year, Japanese authority came in to sell dollar yen around 152 and take it all the way down to 127. So there is quite a bit of a move. So any speculators here who wants to buy dollar yen have to contend with the fact that there is always the possibility the Japanese authority may come in to intervene by selling dollar, buying the yen. Now, over in dollar Canadian, we can see that the possibility of a larger three-wave pullback is possibly unfolding right now. Prices hit a high of 137 and stall. Okay, so right now the crude oil prices is very, very strong. So there's a good chance the dollar Canadian may actually weaken, because if the crude oil is strong, that means there's a possibility the Canadian dollars will remain strong, and that means dollar Canadian may actually dip further. So if that's the case, watch out for a breach below 135.5, and if that's the case, the market may extend all the way to the 134 to 134.5 levels, which is the equality range. Okay, and over in crude oil, we just mentioned crude oil, right? Crude oil has a run up. Prices reach a morning high of $87.98, and this looks like for now a three-wave rebound. So what happens above $90 is going to be crucial. If we get an extended and very impulsive rally above $90.50, that means this is not just simply a corrective rebound. It is possibly the resumption of a long-term rally in crude oil prices. So basically, I would still love to stay long in the crude oil prices. And over in commodities, we are looking at gold here. Now, spot gold actually experienced a massive 6% rise last week. And this again is on the back of the rising tension in the Middle East. Prices hit a high of 1,932.9. And this morning, we do see a bit of a profit taking going on in Asia. And if this profit taking extends a little bit lower, perhaps to $1,913 to as low as $1,905, this could be the last catchment area here as far as we can see before the market rally even higher. So based on the tension that's building up in the Middle East, this one could be even more impactful than the war in Ukraine. After all, the war in Ukraine is already in its 600th day, so it's old news. All the headlines that we've been seeing since last week has been all about Israel and Gaza and about Hamas. So this has the potential to actually turn out to be even more impactful than a war that is happening in Ukraine. And this could actually be the basis in which precious metals will be in heavy demand. So going forward, do stay on the long side of this market. If we do get a dip back to the 1,913 levels, that would be godsend. Okay, this could be the last call. Over in silver, we also see a rally in silver prices. We have a high of $22.82 so far. This is based on last Friday's high. Market right now is holding stable at about $22.68, with the potential to edge higher to $23.37 to $23.60 thereabout. So do watch out for some kind of resistance around this level. But if the market punch through, especially in a very impulsive manner above $23.80, we are likely to see the long-term resumption of the bull market in silver as well. Now, when we look at Bitcoin, Bitcoin is enjoying a little bit of a rally this morning. We have seen prices dip back to the 26,600 levels, and currently the market is at $27,230 thereabout. And the news that's happening over the weekend is that the SEC, which is the Security Exchange Commission, is not appealing the judgment on Grayscale ETF application. So that means there's a very good chance one of the 7 applicants for a BTC spot ETF may actually get their license very, very soon. And that is definitely supportive of Bitcoin prices. So do watch out for development on that front there. But in the meantime, this is all I have for you. I will talk to you again tomorrow with another update. Bye-bye.